it set us up also for a huge fiscal cliff in 2022?
Well, there will be a lot of spending from this package this year and next. It's important not to create a fiscal cliff. We want to make sure that the money is there that's needed to keep our economy operating at full employment. I do expect a fair amount of private spending to kick in. There's been a big buildup in savings buffers that should, in the coming years, spur spending when people can go back to eating out and to traveling and to vacationing. But President Biden is also looking to I call it the Build Back Better package, or a jobs or recovery package that will also provide some fiscal stimulus, but is mainly addressed to try to deal with long-term structural problems in the U.S. economy that have resulted in inequality, slow productivity growth. He's looking at an infrastructure program, at clean energy investments that would address climate change, in education and training to provide workers with the skills they need to succeed, investments in R&D and manufacturing to make our economy competitive and create good jobs for people that have upward career ladders. This will be a further package in the years after that.
Have you been working on that yet? What sort of price tag are you potentially looking at when it comes to an infrastructure climate deal?
Well, the details haven't yet been decided. We've been discussing elements of it, like the ones that I mentioned. And certainly part of the package, the parts that are permanent, will be paid for in order to not raise long-term deficits. But we're still working on the details of the package.
If you do get at least $1.5 trillion of stimulus, as you're advocating, $1.9 trillion of stimulus, I know you do think that will help us get back to full employment sooner rather than later. What sort of GDP figures could we be looking at? Private sector estimates range from 5–10%. How high could we go in this economy this year?
Well, we're in a deep hole, and it would be good if we have really strong growth. And I think this package will help ensure this. The Congressional Budget Office projected that without a package like this, it would take until 2024 to get back to full employment. And I think it's, if all goes well with the pandemic, and that's an area of considerable uncertainty, how that will progress. But if all goes well, I think we could be back to full employment next year.
You and President Biden have talked about raising corporate taxes, individual taxes. Clearly, you have to get through this stimulus and through the pandemic. What's the time frame there? Is this a 2022 story?
Well, it would be it would be a package that would probably be proposed later this year, and would involve spending and investments over a number of years. In infrastructure and education and training, things that would last for quite a few years, and probably tax increases to pay for at least part of it that would probably phase in slowly over time.
We've been spending the day here on CNBC watching the GameStop hearing on Capitol Hill. And I know this is really an issue for the SEC in terms of market structure, but you did convene a meeting of regulators to look at the issue. Do you think that the super easy policies of the Federal Reserve and the stimulus coming from fiscal authorities are making the conditions ripe for this kind of speculative trading activity that we are seeing?
Well, honestly, it's hard to say what's caused this, but there is an increased prevalence of zero commission trading that I think has spurred retail investors to become more involved in the markets. I did convene a meeting of regulators to discuss what happened during that episode. The SEC is going to prepare a report and look into it. And, I think our broad conclusion was that the markets worked reasonably well during that time. And the core infrastructure was resilient in spite of the fact that there was heavy trading and high volatility. But we really need to look at whether trading practices are consistent with investor protection and fair and efficient markets. And so there are a number of areas that we want to look at when the SEC has prepared its findings.
Shepard Smith here. Thanks for watching CNBC on YouTube.